Welcome to the Property Couch, where each week you get to listen to two of Australia's leading property experts. Bryce Holdaway, co-host of Location Australia on Foxtel's Lifestyle Channel, and Ben Kingsley, Chair of Property Investment Professionals of Australia, and the 2014 and 2015 Property Investment Advisor of the Year.
All right, folks, you're on the Property Couch where each week Ben and I bring you the insider's guide to property finance, moustaches and money management. Hello, mate. How are you?
G'day, mate. Do you need something to hold on to? Because I know you're reaching for something. How about that pen?
Yep.
Good to see you, mate. Are you well?
Is that like a trademark?
Well, no, as you were sort of reaching out, you were just needing something to hold in your hand, so I just thought I'd...
Did you see what just happened there? Did you see Iris just took one that had a little clicker on the top and replaced one that had no clicker on the top?
Well, you mean so you don't hear this all throughout the podcast? Very good. How are you, mate?
I'm good. How are you?
Good.
Mate, last day for Movember.
I know. It's good because it is getting a little itchy. Yeah, a little, yeah.
I'm
getting food stuck in mine.
Got some cornflakes. Mate, I actually reckon it suits you. You've got that...
No.
Mate,
no, thanks.
You got a leather jacket and...
Yeah, no.
Harley, you'll be fine.
No.
Hey, so do we know, this is how prepared we are, do we know how close to $10,000 we are? No, we don't.
No.
Right.
No, but we're about to find out.
Yes.
So once we work out how to get into our phone, we are organised this morning, aren't we?
We are very organised. But whilst we're doing that, Ben, why don't we cut to an interview we did with Sam Gledhill, who's the Global Action Plan Program Manager at the Movember Foundation.
Yes.
And let's be authentic here, Ben.
Yes. He's time poor because he's on demand for media commitments, so he needed to get here early.
And I couldn't get here early.
Well, you tried.
So you'll notice there's a particular absence of me in the interview at the beginning.
I opened the batting.
But then as I snuck into the studio, I sort of appeared at the end. So folks, have a listen to that. I think there's some awesome information.
There is.
That Sam was sharing.
They just do wonderful things, and it's a fantastic backstory. Started here in Melbourne.
In Melbourne.
Not that we need to be, patting Melbourne's back.
But scores of countries worldwide, Ben. So have a listen for that. But
fantastic.
Here we go. Let's cut to that interview.
So here I am. I'm sitting here with Sam Gledhill, and he's from Movember, mate. Thanks very much for taking some time out of your day and having a chat with us.
Not my pleasure. It's an honour to be here.
So, Sam, how did you get involved with Movember? Tell us the backstory.
So, I joined the Movember Foundation in 2012, and at the time they were looking for a project manager for one of the projects that they were running in the Global Action Plan. So, the Global Action Plan is a portfolio of 7 research projects in prostate and testicular cancer.
Okay.
And for one of those in particular, they needed someone who had my particular mix of skills in imaging and also cancer research and project management. And so I was fortunate enough to join the organisation as a staff member. And then over the course of the last few years of sort of, like most things do in the not-for-profit world, something comes up, it needs someone to do it. So you stick your hand up and you gradually accumulate more and more roles and responsibilities. And eventually that ended up with me being in charge of the whole GAP portfolio. And I also, at the same time, take care of all of the organisation's testicular cancer initiatives as well.
Fantastic. So you've got a background in nuclear medicine.
That's right.
Technology. So you've been doing that, and then effectively from there you've been able to study and do a lot of research around, that's a word I'm always going to struggle with, testicular cancer. So tell us a little bit about that sort of story in terms of coming into that.
Yeah, so nuclear medicine is an imaging modality. So it's the same degree as when you're doing radiography or CT or MRI. But the nuclear medicine side of things is where you inject patients with a radioactive isotope and you see where it goes in the body. And it meant that I had a fairly close focus on cancer because it's used probably most often in cancer patients. And so then when the role came up at Movember, it was a bit of a no-brainer, really. I'd worked through the ranks in the imaging circles. I was a manager and I ran a private radiology organisation for a couple of years, and then this just seemed like a natural fit. So the GAP program I was looking at finding new and exciting imaging agents that we could use to diagnose men who had advanced prostate cancer. So for men who've had their prostate cancer treated, but then the cancer comes back again, seeing if there was a way we can kind of better organise how those men get diagnosed and how we can identify disease in those men.
Because obviously, it's one of those difficult, rewarding jobs that you do, because if you find something, that's obviously not great news for the person who's getting tested. As part of that process and finding that information, have you been on the front side on the front line where you've had to talk to people about that?
Yeah, not so much. One of the joys of being a nuclear medicine technologist is that you're not the doctor. You're the guy that takes the pictures, and so there is a bit of a buffer between you and the bad news. But you do find yourself, you have to learn very, very early on in your career how to have meaningful conversations, and I think that's one of the things that links into the work I'm doing at Movember too. Like the whole concept of the Movember ecosystem is about having meaningful conversations and really sparking a conversation either between blokes or between a bloke and his loved ones, or trying to get that kind of open communication, that open dialogue. So you do kind of build skills very quickly in how to have those meaningful conversations with people.
And for those people who don't know the origins of Movember, can you take us back to where it all started, how it came about?
Yeah, it's a great story. I love telling this story. So it's 2003 and it's Melbourne, and it's getting towards kind of the spring's in the air, summer's just around the corner, and two of our four founders were sitting in a bar in Fitzroy. It was the what was it called? The Pearl Bar or the Oyster Bar or one of the bar. Anyway, one of the bars on Brunswick Street.
The Oyster Bar and
I don't think it was the Oyster Bar. I think it might be a Freudian slip. But they're sitting in a bar having a beer on a Sunday afternoon, and they were talking about fashion trends and what had come and gone, and where things had been around in the fashion industry. And they said, what, the mustache has never come. This is 2003. We hadn't seen a mustache since 1975. They're like, this is gone. We need to bring this back. So they challenged themselves to grow a mustache in the month of November, call it Movember, and whoever of their 30 mates had the most rocking mustache at the end of the month would be crowned the man of Movember, and that's how it went. So they didn't raise any funds in that first year. And there was two of them that were kind of leading the charge, but then one of the other guys had a brother who was in marketing, and his name's Adam. He became our CEO ultimately. And he thought to himself, we can monetize this. He said, here's a really idea. They noticed strange things happening, like, mums would take their kids across the other side of the street as you're walking down the road. People would look at you funny and kind of, what on earth have you got on your face? And so they noticed, they kind of picked up on this sparking conversations idea. And at the same time, they were looking around, and everywhere in the world was pink, and everyone was raising funds and awareness for breast cancer. And I think that if you look at what the breast cancer world's done in terms of awareness for their disease, it's phenomenal. It's an absolute tsunami of awareness. And so when you look at the time, you look around, there was nothing for men. So the guys thought, this is a real opportunity for us to kind of have a real meaningful conversation around what men's health means. So the following year, they got 50 blokes to grow mustaches. They raised 50 grand, and they donated that to the Prostate Cancer Foundation. And then onwards it rolled, and now we've got operations in 21 countries around the world. We raise between $70 and $100 million every year. And we, focus that effort on prostate, testicular, and also men's mental health and suicide prevention as well.
And then in terms of how do you allocate the funds? I mean, obviously you've got a great relationship with Beyond Blue, but there are obviously, the cancer institutes and those types of things. So where does the money go, and how is it, authorised to go where it goes?
So we've got pretty solid governance structures. So for the biomedical side, which is the kind of side I'm on, that is governed by a thing called our Global Scientific Committee, which is a subcommittee of our board of directors. And they're recognised experts in prostate and testicular cancer from around the world who are independent. They're not funded by us in terms of what we do on the day-to-day projects. So they're independent, and they govern where they think the most important critical needs are in the biomedical research space. On the other side of the coin, we've got a whole bunch of survivorship initiatives and also mental health initiatives. They're also governed by their own advisory committees that are independent, and they dictate kind of what the most important projects are. And at that point, then we make decisions around whether that's something we want to do ourselves, like GAP, where that's operated from within Movember, and I'm responsible for delivering those projects.
The Global Action Plan.
Correct. Or they move and do something with a men's health partner. So that might be someone like Prostate Cancer Foundation or Beyond Blue, or in the US we partner with a group called the Prevention Institute, who do some great work with masculinity.
So does the pie get split in a set percentage, or no, that's again what the board decides based on a needs analysis?
Yeah, it's on need. Okay, absolutely.
Great. Yeah, fantastic. And in terms of does it go to a global pool, or does each country get to keep their own funds?
There's different regulations in each of the countries that we operate in. So in some countries, we do have to spend within the country that the funds are raised in. And in other countries, so Australia and Canada and the US are fairly generous in terms of being allowed to invest overseas. But we try as much as possible to try and keep, because people in these countries have donated to their mates and to their their friends and colleagues, and we want to try and keep it in the pool as much as we can, keep it within the community. But having said that, if there's a really, really great initiative in Belgium and they haven't raised enough money, we shouldn't hamstring them to be able to do
Correct, exactly right. Now, in terms of, we were talking obviously before we started recording around this month alone and some of the stats. I run a segment on the show called did you know? And you were talking about some pretty, interesting stats this month alone.
Yeah.
Do you want to share those with us?
So on Thursday this week, so today, we are challenging men who are participating in Movember to wear a half-mast mo. And I'll get to the stats in just a second. So the idea of raising a flag to half-mast to honour those that have passed, we're challenging men to shave off half a moustache, take a snap, stick it on social media in honour of the 468 men who've died from prostate testis or suicide in Australia this month alone.
468.
Yeah.
Yeah, that's pretty savage, isn't it?
Yeah. So it kind of highlights the urgency of what we've got to do, and also that raising the funds and the awareness in a fun campaign is great, but really this is kind of where the work starts. It's not the end of the journey, it's really the start of the journey.
Yeah, fantastic.
So you mentioned 70 to 100 million before. How much of that is raised in this month? Do you get much in the other 11 months of the year?
Most of what we raise is raised in the month of Movember. So our annual mustache growing campaign is our kind of number one ticket to creating the wealth. And there are other ways that we can look to raise funds, and we'll, over the course of the 15 years we've been going, we've had to kind of pivot and shift and change our strategy from time to time to accommodate the fact that, perhaps after 15 years, not everyone wants to grow a mustache. They want to do something different. We're looking at ways that we can get, say, regular giving through payroll as a way to communicate, as a way to participate in Movember and ongoing. So there is income that comes in throughout the year. There are people who run, for example, in the New York Marathon and raise funds on our behalf, and the London Marathon and raise funds on our behalf. So we wanted to give people the opportunity to do that outside of actually the mustache growing season.
Yeah, they're great initiatives. I don't know whether people realise that, but if you want to go and run, sort of in your bucket list of marathons you want to run, there's a lottery in terms of whether you can run the New York Marathon, the Boston Marathon, the London Marathon. But if you raise a certain amount of money, which I think is a great initiative by those marathon organisations to say, if you can raise $10,000 for a charity, prove to us that you've raised it, you can run in the marathon.
Yeah.
So it's a ticket to run.
So who's running out of us three?
Well, I don't know if you're going to put photos on social media, but it ain't me. I am not a runner.
No, and my back's
and I look
terrible.
like a gazelle, but I'm no runner either. So that just proves it's not what it looks like.
No, so we'll just raise money through giving away a few books. Hey, we'll keep it simple.
There is an interesting there is an interesting partnership that we've got with the New York Marathon, where we every year have got a bunch of Mobros who run in the Point to Pinnacle down in Hobart.
Okay,
and that's the world's toughest half marathon. It's 21 kilometres straight up Mount Wellington. It is a hard run.
Yeah.
And they've got a fantastic group of Mobros down there in Hobart, the Mobart Mobros. Shout out to them if they're listening, because they're a fantastic group of blokes and girls. And if you this year had raised funds and participated in and got yourself a time in the Point to Pinnacle, you could then be eligible to run in the New York Marathon.
So that's a great initiative.
We've been able to partner up with
a sister partnership type.
Yeah.
Well, Sam, thanks very much for coming on. Big shout out to Will, one of our listeners who's made the connection to get you to come along. Is there anything else that you want to share before we say goodbye?
I just think as we get to the end of the month, I don't want people to think that it's too late to be involved, or that it's too late to donate or be part of the campaign. So, if you've got a couple of bucks spare, or you're thinking that you might want to do something to try and help men in your life, get onto Movember.com, make a donation. We're open all year.
Well, no, let's be very clear about that donation, Ben. It's $25. They get a book.
Yes, they do.
Absolutely.
It is awfully close to Stiggy.
We pay for the postage, so there's no extra cost.
So it's actually in everyone's advantage just to get it. So how close are we? Oh, she won't say it.
No.
She'll give us some sign language.
Well, we are close. Remember, it was 11,000 for your webinar. But just thinking straight off the top, why don't we, shave half your mo if we get to 11? So we'll do the half mast mo if we get to 11 as well.
And maybe not shave the other half off until you get to 12.
Is it all right if I just make a quick phone a friend for my wife? Now, I've agreed to this.
I need $1,000.
The itchiness is definitely there. There's no doubt about it.
Well, mate, I reckon yours half-master look like ripper.
Oh, well,
because you've got the chops and everything.
I can go down to the supermarket and get a little bit of foam and sort of give it a bit of
we're up for it.
All right, well, let's do that. Let's get to the half mast and take a couple of photos to social. Beautiful. And get it out there, and let's see if we can get over the $11,000 mark.
Yeah, thanks so much for all your support, and thanks to the Mobros and Mo sisters that listen to the podcast, who've done such a great job getting us close to 10 grand of hard cold cash.
We're almost there, but it's. They want to hear Stiggy. Like our second 5,000 took quicker than the first 5,000. Ben. So what does that say about you and me?
Yeah, nothing.
Clearly,
there's a
demand
over us.
There's a demand for Ives. So,
so because we obviously have met the target, so she's going to introduce the 150th show. So the big show, the milestone show, we're going to give her the reins to introduce the milestone show.
Well, if she's got any objection, she needs to speak up now.
Yeah, any objections, Ivis? That's what we thought.
That's
agreed.
So there we
Let's
go.
put it to a vote. Aye.
Well, we'll get Sam's
the
vote
ayes
as well.
have it.
So that's
Aye.
so that's 3
Ivis.
Yeah, aye for Ivis. There it is. Well, thanks very much, Sam, for coming in.
No worries,
we really
it's my
appreciate
pleasure.
it, and we wish you all the best. It's a fantastic initiative. We've been thrilled to be able to get behind it this year, and we wish you all the best for the future.
Thank you.
Hey Ben, how good is that? What's some terrific stuff there? Sam is a natural on the mic, isn't he?
It's like he's done that story before.
Done that a few times.
But the important message is in there, and again, just because we're coming to the end of the month doesn't mean you can't find a couple of bucks. There's a book there.
Well, here's a little bit of.
We've got the update.
We've got the update.
Okay.
So here's where we're up to with a day to go.
A day to go.
$10,000 and 76. Yay!
That's great stuff.
148 episodes. Ives has been behind the scenes, but no more.
No more.
No more.
She's coming out.
If we get to 11,000, there was a webinar of our listeners' choice. Whatever they want.
Whatever they want
what
Bryce
people want
to talk about.
We'll
Don't throw me into it. I've actually already put mine in the can. I've done my webinar and everything. How are you going?
Why don't we talk about Freo's prospects for next year? Why we finished higher on the ladder than Collingwood? How we dominated the draft. So, all right. Well, there you go. That's a fair call. Hey, do you know there's a bit of a rumour going around this office, Ben?
What's that, mate?
I was talking to a few of the crew yesterday, and they reckon you don't take my Mindset Minute and my Life Hack segment seriously enough.
That's not true.
That's true.
That's not true.
That's
Right.
the people, mate. It's not for me to say. It's not for me to judge.
Right.
They just say that you're.
So are you going to put me on a spot to name 5 of them?
I'd actually be happy for you to name 2, but go for it.
There's that Dave one, the money guy from another podcast. He had
Sure.
a good saying.
What was that? What was that?
That was a good saying.
Yes.
It was good.
What about Life Hack? I mean, that's easy. They're about stories.
Yeah, there's life hack. Yep. Lots of phone stuff.
Sure.
Lots of
For
things
example?
turning on the flight mode so you can charge your battery.
Did you recover then?
Bang! There we go.
Okay, that's 1. Where's 2?
What else did you talk about?
Because most of them, I think, how can I help Ben out?
Oh, the book, the summary book thing. Actually, yeah.
What's the summary book thing?
That thing that you plug that you
what's
get
it called?
paid for.
Yeah, what's it called?
Oh, you don't get paid for it, that's right.
What's it called?
It's called Blinkist.
Oh,
there we go. We got him again.
So just putting you on notice, it's been noticed by the folk around the building. Had a little chinwag with them yesterday.
Yep.
And they said, we feel that he doesn't take it seriously enough. So
I think they're terrific. I really do. I think, mate, I've learned from them. I love them. I keep them coming.
All right.
Keep them coming. In fact, I might even do one day.
Folks, couple of things. There we go. I was lucky. This is how you've kept me sane in this whole podcast. I've got to say, you kept me sane. So you did that webinar that you finally did.
Roll the eyes. We got that on camera. Then.
Finally, the webinar that he promised for about the last 53 episodes.
Done.
Principle and interest. Yeah,
I've done 2.
Okay, so we've got that in the can, right?
We've got both of them.
So how do the people get that? There's only one way to get it, Ben.
How's that?
They have to go to the homepage, thepropertycouch.com.au.
Okay.
They have to put their name in the box there to get the Money Smart system.
Yep.
Because we will send it out to them via email. There's no other way, Ben.
Ooh.
There's no other way.
No other way.
So if they want to see your webinar, and if we make it to $11,000 my webinar, they've got to give us their first name and their email address on the same page.
So that's the interest only versus principal and interest. Is that the also? Let's bundle this. So now we're talking about the basically the shortfall. So working out your retirement shortfall.
Yep.
And how you use property to do so.
Yep.
And then the big question mark webinar. Is that
question mark? So if you want those, you go to thepropertycouch.com.au, you download this is my way of saying to people, get the Money Smart system because it's going to change your life.
It will change your life.
But therefore, as a result of getting that Money Smart system, we will email out to you via our weekly correspondence the links to these wonderful resources.
Yeah, they are great
that
resources.
You finally pulled your finger out and put together so that these people
just
can
helping.
enjoy.
It's just helping people.
So
I'm just into helping people.
All right, Mindset Minute theme today, Ivis. Don't complain about things you're not willing to change, Ben.
Yeah, there it is.
Don't complain about things you're not willing to change.
Yeah.
So As you know, I love mindset stuff.
Yeah.
I've engaged a personal development coach, Ben.
Ooh.
And so is my wife, Andrea.
Okay.
And he's got this
news to me.
He's got this
News flash.
Oh, I've been talking to you about it. It's like life hacks and mindset minutes. You sort of glaze over a bit as I'm chatting about it.
Well, I must have been, on a distant planet when we had that chat.
So, well, you don't remember me talking about it when we were on the plane in America. I caught up with that guy before I flew out. And
Oh, you didn't give him a title.
Oh,
you just
there we
said
go.
mentor.
So,
yeah.
So, personal development coach.
Yep.
I don't like the term life coach because it sort of conjures up sorts of images in my mind that wasn't healthy.
Yep.
But he has this theory, right? His
Yep.
name's Jamin, and I reckon we might get him on the podcast for the mindset stuff because it's just
Love
brilliant.
it. Yep.
He says people work perfectly, right? And so we all operate in a vacuum. And so if someone complains about something, like let's just say Ivis complains that we ride it too hard to get the deadlines and all that sort of stuff.
Which is simply not true.
Which is
but
not
just
true.
hypothetical.
But if she did that on a regular basis, there's actually a secondary benefit that she's getting from the complaining or from things not going well. It means that she can say, well, look how great I am. I make things by short deadline. Like there's actually some significance that comes out of that. So if you remember, Tony Robbins got his 6 core needs:
Yes.
certainty, uncertainty, significance, love and connection, growth, and contribution.
Yeah.
We all want to get significance in some way. And if you think about the person who has like I don't have any tattoos, right?
Yep.
So I don't understand what it means to have 7 tattoos, right? So my question is, if someone gets the 8th, why do they get the 8th? Well, that's their way of feeling that they're getting that core need of significance being met in some way. That's just an example, right?
Yep.
And tattoos are fine. So don't write me, tattoos are fine. Just an example that Tony Robbins uses in the detail. So if people work perfectly, don't complain about things that you're not willing to change, because the things that you're not willing to change, you actually get a secondary benefit from. Are you following me?
Yeah, no, I get it. It gives you an interest or even a purpose.
There's something. There's something that you get out of it.
Yeah.
And so you've got to be willing to understand. Because to change that means that if you're the thing that you're complaining about, you might have to step up. You might have to put yourself out there. You might have to, be a victim of tall poppy. There's a whole range of things that come. So be careful what you ask for. So today's Mindset Minute is very simple. Don't complain about the things, Ivis, that you're not willing to change.
And Ivis doesn't complain, for the record. So
no, she doesn't actually.
No, she's just.
We were just talking before, though, weren't we? That she has changed. She used to be this. Anyway, she's just
she's just become our producer,
and
a very good one at keeping us online.
Yeah. Did you see what she just did then?
She's
all right. Today is. I'm excited today because we're doing Q&A day from the listeners. But instead of you and me sort of tripping over, bumbling it out, we're actually using SpeakPipe today.
Oh, bring it on!
We've got some folks who have gone straight to the top, simply because they went onto our website and they checked out SpeakPipe. And here's our first one from Anonymous.
Hi guys, I'm thinking of using a buyer's agent to secure an investment property, and I'm just curious as to whether I need to give them a letter of authority or a power of attorney, or possibly both. Could you please explain the difference and how I can use them? Thanks.
Very good question, Ben. Very good question. So we're dancing around legal stuff here.
Yes.
So we're going to talk about general.
Yep.
Talk to your solicitor. But the fundamental difference is someone engages our buyer's agency division. They have a letter of authority, or we call it engagement paperwork.
Yep.
You might have the standard REIV or REIQ listing authority. Yep. But essentially what you're doing is formalising the agreement between the service provider and the client, so that we've got instruction to act on their behalf. So that's the letter of authority. The power of attorney we use in a couple of ways here. We have a general power of attorney where the client is giving instructions for us to act on their behalf in a transaction. So an example might be a property that's going to auction this weekend. The client's in Sydney, we're in Melbourne. We might have to sign on their behalf. We need to have a general power of attorney that gives us the right to do that. But then we also get a specific power of attorney. So it's a limited power of attorney where the owner is giving, the client is giving us instructions to sign on their behalf on a specific property, on a specific day at a specific time. So essentially a power of attorney is letting someone else act on your behalf in a matter that's really important. So for us, it's usually the signing of a contract on behalf. But,
correct.
But again, subject to talking to your solicitor, that's the general idea.
Totally, and obviously, other businesses do it slightly different in certain ways. The tips that we have for people, the one thing that comes to mind is if you are giving those instructions and you're setting limits, because it's really important. If you give a limited power of attorney to go and buy property X, but you don't specify the conditions, i.e., they turn around and say, yeah, I bought you that property, but I paid $2 million for it. But no, I only wanted to pay 1.8. Oh, well, that wasn't communicated. So all of a sudden there's this, grey area. So if you are giving that authority, and they're saying, well, I've got the authority to act and you didn't give me a limit. So it's just important to make sure that those limits are communicated, because the last thing you don't want is obviously any sort of legal battle that's going to pursue from buying the wrong asset at the wrong price or whatever it may be. So it's always good to dot I's and cross T's.
So anonymous, and in 100% of the cases you will sign some form of a letter of authority for the engagement of the service.
Yes.
And in limited occasions you will use a power of attorney so that person can potentially act on your behalf.
And with the letter of engagement, if you're looking at one of those, what is the scope of works? So there should be an outline in terms of what they're going to do, how they're going to do that process. There should be, they should be providing you some information around, the way in which they work and how they do that. They may be providing you with reference documents and research documents. I mean, the good buyers agents out there have things like blueprints and all these types of things that are justifying the research of why they're buying in those areas. So all of that should be documented either in the engagement or as part of the process of the work that they perform.
Yeah, right. Too right, Ben. So what happens if you've got a conflict in arrangement? What happens if you're unhappy with the arrangement? What's the rules of engagement? A good letter of authority will spell all those out. Ours is about 7 pages, Ben, so it's pretty clear.
And with PIPA members, there's also a dispute resolution piece. So they need to know what are the channels if there are any disputes. So normally the process would be that you would try and negotiate an outcome that's satisfactory for both parties, directly with the business or directly with the person in the business. And if that can't happen, it's escalated then to management. And if that can't happen, you then get an intermediary such as an ombudsman or something along those lines or a mediator to be able to sort those matters out. I mean, the last thing you want to do is have to go to court if there's any problems. But great question.
Yeah, great question, Anonymous. So one is to engage the service, one is for someone to act on your behalf, and get your solicitor to give you more details if you want to be specific on that. So thanks for that.
Very good.
One from Stuart, Ben.
Stuart.
Hi guys, great podcast. I've spent the last year listening to your podcast and trying to get as many tips and advice about my property investment journey that I'll hopefully embark on very soon. A bit of a spanner to the works though is I'd always envisaged starting out maybe a 1-bed, 300 to 400,000, maybe interstate. I currently live in Victoria. But our current house that we own and occupy is maybe looking a little bit too small for us. So my wife has raised the question of us buying a bigger property. So the key to the question is, what are your thoughts on your first rental investment actually being the place that you currently occupy? I know you guys like detail, so I'll shoot through with that. Currently, it's a 3-bedroom, 2-bathroom property in Chelsea, Victoria, about 17 to 20 minutes from the train station and the beach. We bought it for $505,000 in 2013. We owe $467,000 on it. We pay on interest only about $1,500 a month, and I think it's worth approximately $650,000. So really interested to know, what are your thoughts on a 3-bedroom, 2-bath in Chelsea becoming our first rental investment? It's not really what I'd mapped out listening to your podcast, but we'll probably have to buy a 4-bed bigger in and around this Chelsea Bond Beach area, but just want to see if that's a viable option in your opinion. Look forward to hearing your thoughts. Thanks.
Oh, Stuart, great question. Thanks for the detail. One other thing I'd probably want to know is the cash in bank. So what sort of deposit do we have? So obviously there's a little bit of equity there in terms of 467 versus a 650 price point. This is all about big rocks in the jar. So yes, we do spend a lot of time in talking about investing, so having your principal home and then investing, but the reality is a lot of investors are trying to invest in conjunction with potentially getting on the property ladder to maybe upsize to their dream home as well. So we do a lot of the property planning work around that in making sure that it's not just purely investment. So this is a classic case of that, and I have my own circumstances where I have lived in a couple of the investment properties that I've bought, and then I've turned them into investment properties on that journey as well as we moved up. So I've bought properties as pure investment, but I've also bought properties that I've lived in, and then obviously we had our family, and so we moved up into a bigger family home. So the argument to that is I have no problems with converting your existing home into an investment property. And that's why also the benefit of having the offset account is so important, because what we want to do is be able to transfer the money that is against that loan to move it into the non-deductible loan as opposed to the investment property. So absolutely still going to come down to your cash flow, Stuart, so I'd still need to understand the story around incomes and what sort of cash position you've got, but there's absolutely no problem. And in reality, I'd much prefer to see you do that than having to sell that property. I mean, ultimately, this is an accumulation game that we're trying to play, isn't it, Bryce?
It is, mate, and you took the words right out of my mouth there. I think this is more of a finance question than a property question.
Yeah.
Because, as you say, the scenario that often comes up with this type of question is I've fully paid off my house and I want to keep it as an investment property. And that's where the challenge sits, because people will need that equity that's in the house to buy the next one. They leverage against the security of the one that they are in to buy the one that they want to move into. But the tax department doesn't give a rip about what you use for security. All they give a rip about is what's the intention of the loan, and if it's for a private nature, they won't make it deductible. So the fact that he's got, was it $467,000 worth of debt on a $650 purchase, that to me...
$650 val.
Yeah, $650 val, beg your pardon, tends to suggest that it's, still about 80%. So there's still good tax deductibility of the interest. And as you said, you satisfy the other non-financial goal of making sure his wife is happy with the local area. Chelsea, for those who don't live in Victoria, is a ripping location. It's beachside. It's on the beach. It's got a train station, so you can commute into the city and have the lifestyle on the weekend. And the fact that this city's got, under 5 million, soon to be 8 million in 20, 30 years, people are going to value that even more to be able to escape from the city and get access to a capital city job market whilst having that lifestyle. So for me, it's more of a finance question than a property question, because the property, from what we know, just makes sense to maybe.
Yeah, and there's an added purpose there. So if you were to, the other point there, Stuart, is let's say you went off and bought that one-bedder apartment around that sort of 300 to 400 range, the reality could be for you that is going to spoil your ability to actually get the owner-occupied home. So, because it's either zapped up all your cash, etc. So there is a conversation around. I mean, if we're talking about having $300,000 or $400,000 in cash, then it's a different story. We might be able to do both. That's all going to come down to the cash flows.
Here. All right. Thanks for that question,
Yeah,
Stuart.
terrific. Thanks, Stuart.
All right. Let's keep this going, Ben. This one's from Nicole.
Hey, my name's Nicole. I'm from Canberra. Woo! We're looking at buying our third, one PPR, two investment properties, our third place. And we're looking at a one-bedroom unit, which is 41 square metres in an old 1970s building close to the 5Ks from the CBD. It is in Canberra, which I know we pay land tax, but it's a $200,000 property with a $300 a week yield. And my husband can also renovate it. So which I think outweigh the land tax issue. But my question is around banks lending money to under 50 square metres. There seems to be quite a few banks that will lend under 50 square metres these days. But going forward, when we go to sell this in, say, 20 years' time, if we do sell it, then do you think that the banks are going to change their lending criteria on smaller places, considering that a lot of people moving forward will be living in smaller places? So I guess I'm concerned that it's going to be hard to sell in the future. And what are your thoughts on that moving forward? Thank you.
You are welcome, Nicole. Thank you for your question. Hey, Ben, for me, that's around purpose, because the question for me when this comes up is not whether or not you can get someone to finance it, it's whether or not you can get the majority of the banks interested in financing it. Because if your purpose, say you're a first home buyer, and you want to buy this property and it's all you can afford and you can find someone to finance it, great, that's no problem. But if you're wanting to put it into a portfolio, you got to remember that property investment is a game of finance as much as it's a game of bricks and mortar.
Yep.
So if you get a portfolio, we had a scenario this week that we talked about where it's a client of mine, on paper, no problem with servicing, no problem with security. And the bank just said, we don't have an appetite for that risk. And it's not a 41 square metre property.
Yeah.
So my suggestion to Nicole here is, what limitations are you opening yourself up to from the bank? So I've done a video called Buy Properties That the Banks Like. Under 50 square metres, the majority of them, they take a deep breath before they assess it. They don't go tick, tick, tick. So for me, if you've got, she's got 1 PPR, 2 investment properties, and wanting to put this in an ongoing portfolio, and depending on what the end goal is, my question is, it may hamstring you from finance, and like she said, and you may then have a limited market if you've ever got to put the for sale sign at the front, if you need to get a quick sale. So for me, it's, on paper, the numbers look good. 200 purchase price, 300 yield.
Yields are great.
It looks pretty good. 70s apartments, so tick. 5Ks from the CBD. But for me, if it was the last property in the portfolio and then the rest is retiring of debt, probably no problem.
Yep.
But if there's more properties to be purchased, I would just say you need to have that awareness around the fact that it may limit lending.
Yep. So, Nicole, and I agree, Bryce, I mean, taking the long-term view, Nicole is right that property sizes will reduce. And as they reduce, the bank's appetite for them will get better. Okay, when we're taking that 20 or 30 year. But I think what you're also highlighting is, if we need to refinance that property to release equity, what's the loan to value ratio that they're going to be comfortable with in this changing time? So that story that you were talking about earlier with that bank whose appetite, they looked at the overall portfolio. Now, we eventually got the loan formally approved, but that
was through influence and our reputation.
Correct.
If someone's on their own, they wouldn't be able to do that.
Possibly not. So it's a good story around what's happening inside credit departments of the banks in their appetite for multiple properties, all interest only lending, even if you do have big, large sums of money in offset accounts. So, Nicole, here's the things I like about this, and this is probably why you will proceed, is that 1, your husband can add value to it. 2, it's already cash flow positive from day 1. And 3, because it's in an old 70s block, 5K from the city, and it's a unit block in Canberra, your land tax portion is actually lower, because you've got to remember, land, that we don't like houses in Canberra because the vast majority of the asset is taken up in the land and the value is taken up in land. So that's why we have to pay an absolute premium for that. But Canberra is a transient community. It's got great universities. So you'll always have high rental demand, great amenity and so forth. So I think those are the reasons why, if we put this on balance, you'll probably proceed, which is a good thing. But just be mindful that there could be some limitations. But because it is automatically cash flow from day 1 and was potentially to manufacture equity out of it, I think on balance, and you can do that in your local state, I can't see a reason why it's not a big enough reason for me to say no.
No, because that surplus, again, depending on what the next thing that they want to do in their portfolio, but that surplus yield is going to do a fair bit of debt retirement going forward.
Correct.
So for me, the deal seems to stack up as a standalone. Just how does that fit into the overall portfolio and the lending? So
good work.
Hopefully that helped, Nicole. Thanks for your great question. All right, here we go from Tom.
Hey guys, firstly I want to say I'm loving the podcast and keep up the good work. I'm sure I'll be a listener for years to come. It's been incredibly educational. Firstly, my wife and I have about 180k to invest, and we're looking at buying our first home in Brizzy. We're trying to choose between paying, in our eyes, which is a premium, so about the 600k mark, for an older 3-bedroom home somewhere closer to the CBD like Maruka or the convenient location of Mount Gravatt, or paying early to mid-5s but getting a bigger 4-bedroom home somewhere further away like Underwood or Springwood, and using 120k, leaving us about 60k towards our next property down the line. This is our first home and we don't plan on living it forever. We just want to use this first purchase as a stepping stone to our next property. To sum it up, basically it's buying a home close to the city, which will use up most of our deposit, versus buying a home further away but giving us a good amount of money to jump into the market again down the line. Would love to hear your thoughts, guys. I know you said as a rule of thumb to be as close to the CBD as possible, but I am worried that this will prolong our next purchase considerably. Thanks, guys.
Thank you, Tom.
Tom, what will prolong your next purchase is how quickly that property grows. So the reality is equity is going to have to play an important role in doing that. Now, obviously, we don't know the properties, so we can't comment exactly on what those properties, but in terms of the areas, I know Mount Gravatt and that type of area quite well. So my view on this is, again, if it was my money, I'd be going closer in where the scarcity story, the livability story is absolutely better than the potential bigger story out wide. But remember, livability score, walkability score, those types of things are going to be really, really important to put pressure on that area, because you're going to always add value to those assets that are closer in, that have the conveniences, the transport nodes, those types of things. So we've always said, and it's clear as day, anywhere globally, you can put a ring around a city and you push out from that city, and more often than not, you're going to find that the wealth is closer into the city. So those areas that you're talking about are areas that will potentially gentrify, and as they do, you will start to see more and more of that value come through. We don't want to be buying in general suburbia. We want to be buying in those areas that have young upstart professionals who are going to add value and potentially help gentrify that. We need the restaurants, the coffee strips, those types of areas that people will be able to want to attract to and be seen around. Remember, owner-occupier appeal, human interest, human behaviour. That's where my money would go. I wouldn't go for something cheaper out wider where there is a glut of that type of property.
Ben, it's like we talk the same message, mate, because I'm writing bullet points and you ticked it, so you got him before me. So what I'd say, I was going to say scarcity, but supply, our friend Jeremy, who's going to come and chat shortly, he says supply is the enemy of capital growth. And so some of those areas that he talked about further out, supply is not a problem. There's another subdivision that they can create, bringing more supply onto the market. Whereas I do know Maruka, I do know Mount Gravatt, they are landlocked areas. There's only sort of redevelopment available there. So I'm with you, mate. And I think it's a good, reminder that it's not about the number of properties you have. We know people who have got 7, 8, 9, 10 properties who have got poorer performing portfolios than people who've got 3 and 4. So that question was about when can I get my next one? That's not the name of the game. The accumulation of more and more properties is not the aim of the game. It's about getting better quality properties that increase the value of the portfolio over time. That's heading towards our ultimate goal. So I'm with you, mate. I would go further in. And
so put that into context. What we're saying there is you save the amount of money for your next deposit, but wouldn't it be great if the value of your home or your investment is growing quick, and it's the combination of the two that allow you to get to that next one. So if you're saying, well, I just need, I think I'm getting more bang for my buck because I'm buying something a little bit out wider and it's got an extra bedroom and that will be good for tenancy. Well, I'm sort of saying, ask the audience. If they all had a choice, would they want to live a bit closer in Mount Gravatt and those areas? I suspect they would. So that's your message there in terms of where is everyone aspiring to move to. It's usually closer in, and that's potentially where that longer term capital growth is going to come from.
Yeah, property investing is about value. It's not about price. So don't get caught up in what's the price of what I'm paying. It's what's the value of what I'm getting. So
beautiful.
Hey, Ivis, no, I was just saying that's it. Ben, I was going to sneak another one in, but
we're out of time.
It's actually a really big one, so I think it actually is a really good topic because someone's written in, someone's left a message about the market and the doomsday articles. So maybe we might roll that over to next week, and we might open the banner with that because I think there's a fair bit that we can.
Oh yeah, I like that one.
Unpack on that one.
Fantastic. So what have we got now? Mindset Minute. No, what's the other one you do?
You are just confirming every one of the water cooler chat around here. You've just dived on credibility. So that's all right.
Motivational moment, mindset minute. What is it? What's next?
Life hack.
Life hack. Goodness me. I'll get this right one day.
You will, mate. You will. So clearly I found my co-host from norespect.com. All right, let's move on.
It's all part of the game.
Let's move on. So in the interest of our episode, Ben, it's the People's Podcast.
It is.
So I've got the People's Life Hacks here. So Alex has written into me. And 2 life hacks, a lame one and an awesome one. Okay.
You call them.
No,
apologies for Alex. Did he call it himself?
That's what he called it.
Right. Okay. Well, let's put that into context.
Alex could be she.
Yeah. Okay.
So I'm not 100% sure on that.
Right. So, but they've declared their own life hack a lame one. We're certainly not doing that.
So the lame one is, if you have no kindling for a fire, Doritos are an excellent substitute.
Oh,
so burn the CCs.
Burn the CC. The Doritos. Yeah. Okay, but the corn chips.
The corn chips.
Corn chips burn.
Yep,
they do.
Awesome life hack. Use a climbing carabiner to pick up all your plastic shopping bags in one go. So uncultured soul over here didn't know what it was.
No idea.
So I decided to go and check it out. Do you know what it is? No. Ibis, do you? No. So do you know those little D clips that you get when you're doing abseiling? So put the cord in, then it flicks back, and sometimes you can twist them so that they lock in.
The shackle.
The shackle.
Yeah.
Mate, you've got to call it what it's called. The people have said it's a carabiner. Can't call it a shackle.
Carabiner. You're rightio.
So I've gone and Googled. So have one in the boot, and when you're collecting all your shopping, just weave it all through. Bang, straight into the house. Don't have to worry about cutting your fingers. All that sort of stuff. So Alex, that's right up there, I reckon.
Thank you, Alex. That's terrific.
And the sad thing about that is he will remember that one because that's Alex's. But all right, mate, I'm intrigued. I mean, you deliver so much gold for Did You Know? What have you got for me today?
Well, we've got Jeremy in. You know, the location lads are here.
Yeah.
So LocationScore lads. So we're just going to do it around the grounds. I thought it's the right time to just basically see what's been happening out in the market. So thanks for joining us, Jezza.
So what are you saying? You need someone else to come and deliver your Did You Know segment?
No, we've always said we're going to have Jeremy come in basically every quarter and just give us a little bit of an update in regards to LocationScore.
Convenient.
What he's seeing in the demand and supply location.
It's convenient. Well done, mate.
Yes. What? Outsourcing. Delegating, it's called, isn't it?
Don't worry, the listeners know what's going on here, but at least we've got quality in here, Jeremy. How are you, mate?
The guru's here. Good. The guru's in the house. All right, so what are we seeing? Let's start with the biggest capital. What are we seeing with the biggest capital in Sydney?
Okay, well...
the market's crashing, isn't it? 40%? If you read the newspaper, it's just tumbling.
Well, I did read 10%. I don't know if it was in the newspaper. One organisation said it would come back by 10%. But,
wow.
Yeah, I can't see how that's going to happen. So the location score, the average location score for the end of October was 62 out of 100. Mm-hmm. So I don't know how familiar your listeners are with the location score. We're measuring all these supply and demand metrics, and we get a score out of 100. So 62 is about where Sydney was, 5 years ago now, before the boom. So it's back to a balanced state. But yeah, I don't see how it can retract. A lot of people talk about affordability being a problem, but when people run out of money, they just stop buying. That doesn't cause prices to drop. It's when you get oversupply that prices drop, and there just isn't enough construction to keep up with demand. So, yeah, I can't see any retraction at all.
Pockets like Parramatta, we know it's a big boom.
Yeah, there's always going to be those isolated markets where there's massive oversupply, where developers just go crazy.
Yep.
But as a city, as a whole, it's just not possible that we're going to see any retraction, I think. Yep. Certainly over the next 12 months, I'd expect some more growth.
There's nothing in the data suggesting that, so we're back to balance. Yep. So
probably one of those organisations where PR have more clout than research as to what gets published.
You've got to remember that the media doesn't like boring.
And Sydney's boring.
And boring is
it's back to equilibrium. You can't write a headline around equilibrium, can you?
Everyone grab the paper, equilibrium Sydney. So
Melbourne's a lot more exciting.
Okay.
Still plenty of growth there.
Yep.
Again, the media's been banging on about, we've hit the peak there for Melbourne. There's nothing in the data I've seen to suggest that. I don't think it's accelerating, but it's, Sydney and Melbourne are massive beasts. They've got that sort of oil tanker-like momentum, so they're not going to just stop on a dime.
Yep.
And just as soon as we get to really radically high prices, doesn't mean that all of a sudden it's going to stop. So, yeah, again, nothing in the data to suggest that Melbourne's going to slow down.
So what are we sitting at as a number for Melbourne?
It was the average location score was 65 out of 100, which is quite good.
Yep.
Interestingly, though, not the highest in the country for a state capital.
We'll leave that to the end. We'll leave that to the end because
that's going down south, I reckon.
There's obviously only really 2 other capitals that are showing a bit of sign of life over and above Melbourne. We'll get to those. We'll finish off though. How about Brisbane Vegas?
Yeah, again, similar story. Poor old Brisbane, always the bridesmaid, never the bride. I think it was 2012. Everyone was saying, this is Brisbane's turn. Of course, Sydney took off, did so for 2013, 14, 15. Every year, everyone's saying, this is Brisbane's go. And then, of course, it was Melbourne's turn instead of Brisbane. And now Hobart's exceeding the growth of Brisbane. So it's business as usual for Brisbane. I'm not seeing any trouble there. But it's just boring.
Obviously, units for houses. That's where most of the drama might be.
Yeah. There's a lot of. It's just so much easier to get oversupply in the unit market.
Yeah.
Developers can just knock up a ton of units very quickly, not overnight, but it's much harder for houses because you need more land, and that requires a lot more infrastructure.
Hey, what we're finding in the Brisbane market is if you go from sort of 4 to 5 Ks and a bit sort of out to the 10. That's actually a stronger rental market than the inner because the oversupply of apartments in the city has created a bit more. But,
So what's our overall score for Brisbane Vegas?
What was it for Brisbane? It was 58, which is just a little bit above average. Just, nothing special, nothing to write home about.
All right. So our
but having said that, Ben, there's a fair bit going on in Brisbane in terms of job creation, the price disparity between Brisbane. So, we are
buying properties in Sydney, in Brisbane, I should say. We're absolutely doing that.
Sydney's the only market we're not actively buying on the East Coast.
Because remember, you can't buy the mass market. You can't buy all the Sydney. You can't buy all the Melbourne. So inside that is the gold. So there are definitely some really good suburbs that are showing some really good locations.
Can I also give another observation too, Jeremy? Is what's happening is we're getting a few Sydney clients wanting to buy in Melbourne, and they're actually. We have to reset what they can actually buy because they think, Sydney's worth a fortune, Melbourne's got a price disparity, it's pretty cheap, and they still think they can pick up period homes for under $1 million. And they're actually our team is like having a reframing exercise at the very beginning about hey, look, let's be real about what you can buy. $750 in Melbourne doesn't buy you a period home.
No.
In fact, if you have to go a bit maybe down to Geelong to even get a period home for $750. So, so it's that reframe of what Sydney people could buy when they come to Melbourne, which is part of the exercise, right?
Yeah, I think you're right. I think it's basically saying Melbourne's cheap when we talk about the entry-level properties on the fringes compared to Sydney's entry-level properties. Those Sydney entry-level properties are $700,000, $800,000 out wide. In Melbourne, they're still around 500. So that's probably where there is a real disparity. But you come in close, you're paying good dollars for good assets, over the long term. So let's go to Perth. Everyone's trying to pump Perth.
Be gentle, mate. This is my inheritance. Be gentle. Come on.
They're pumping the tyres in Perth, but as much as they possibly can. I'm on the pump right now. Come on, Perth. Come on. Or I'm going for the whip. Go on.
People have been waiting a long time to hear some good news out of Perth.
And the drum roll
well, gentlemen.
Are we talking about the draft?
Fremantle's
draft?
No, we're moving on from that.
Yeah, there still isn't any good news, sorry.
Well, that's the balloon going. I just pumped the balloon.
The inheritance is just tracking sideways.
So,
it's not getting any worse, but it's just it's sitting there. It'll take a while to recover. So data is, I think the location score was the average. It was 51. That's for the month ending October.
Okay.
So it's
a pass.
Ever so slightly, it's a pass.
On the average is 54, isn't it?
The average is actually higher than 50, at the moment. Yes.
At the moment, so there we go.
Mate, I'm just looking for good
glass
news.
Half full versus glass half empty. Okay, Adelaide.
Adelaide, the average location score for Adelaide was 62, which is actually
there's a pulse in Adelaide.
Slightly above Brisbane and is quite healthy. It's about the same as Sydney. So actually it's above Sydney and about the same as Brisbane.
Okay.
But it's been there for the last few years, that score of around about 62, low 60s. And it'll just chug along, like it has over the last
no
few
boom,
years.
no bust there. It's just
No,
a chug along.
we've seen
We've seen
some.
some great. Can I brag about a deal that one of the guys put together?
Sure.
The client had $1 million to spend, so even in Melbourne, that's not necessarily going to buy you a fantastic period home in some places.
Yeah.
Went to Adelaide, bought a block of 5 2-bedroom apartments for $1 million, with $67,000 worth of income. So 6.7%
Rental yield.
in a great suburb.
All in one or 5
strata titled.
So they've already been strata titled.
Already strata titled.
Don't even have to re-strata.
No, it was a cracking deal. So,
there we go.
But just to get that market with that income level.
Yep.
So
it's funny that for the last 5 years, every year there's been drumming up of Brisbane. Brisbane follows Sydney. Oh, then it was Melbourne. Brisbane will follow Melbourne. Then it was Hobart. I'm just wondering if those poor Brisbane owners are going to get pipped by Adelaide now.
Well, they're building.
Hey, we've got the commissioner for Brisbane here.
They're building a few submarines, and there's a little bit going on. Look, but to Brisbane's credit, the economy has turned.
Yeah, have a look at the infrastructure projects they got coming up in the next 10 years. There's some jobs in that. There's some big projects.
It's turning.
Yeah.
So but again, that's why we think the opportunities are closer in at the moment. Now, obviously, we've done Darwin.
Oh, you want to do Darwin next?
We'll do Darwin because, I'm assuming the last two are going to be your best two.
Look at you.
In terms
I was
of
going from largest economies down to smallest.
Oh, okay, rightio.
We'll skip one and we'll go to Darwin.
Okay.
So Darwin's story is very similar to Perth.
It's hot.
That's the weather. The property market.
It's the average location score was, I think it's 51.
51. Yeah.
Yeah, I mean, back in 2013, it was as high as 64. So obviously, resources boom has hurt Darwin.
Well, they're coming out of that sort of production. They're into production phase of their big gas projects, and obviously the US base is all sort of filled in now. So we're starting to see it. So look, Darwin's got a great yield story, but it's still, values are coming off there. So it's a wait and see with Darwin, isn't it, in terms of what you can get. But when it runs pretty well. I mean, you've got to remember, if you go over the last 10 years of Darwin, it's actually been one of the better performers when you look at the data. So that's interesting. All right, so we've got two others.
Well, we'll go with Canberra next, which is one of the hottest markets in the country
nation's
at the moment.
capital. Yep.
Very small market, of course, but it's got the most densest concentration of high location score suburbs. So there are a large number of suburbs, quite often neighbouring each other, which have very high location scores. So the average is quite good. What was it? It was 64 as at the end of October, which is not the highest in the country, but you've got quite a small market where almost every second suburb is a growth market, according to supply and demand.
I think Canberra's the classic one of the FOMO. There's no doubt that this is led by Canberrians who are upsizing or buying at the moment. Canberra's performing pretty well. There's a lot of new suburbs coming on. There's population growth. So it is a good news story. As we've always said, though, the challenge with it for buying houses with land is the land tax, so be careful. But we had Nicole on before, Jeremy, who she's going to look to buy a little unit that's a little cash cow. And in that particular case, you can add value to it in the land. The land tax is dispersed amongst all the unit holders, so it's not as big a burden as what it is potentially for owning the freestanding house outright. So that's
there's another peculiar thing about Canberra. Obviously, the primary industry there isn't about to go bust. But
that's as long as they don't have dual citizenship issues. But
things change after elections, of course. But it's one of those sort of stable economies because of that, which is a plus for such a small market.
Look, there's a lot of money in Canberra. There is a lot of money. It's outside of Western Australia during the mining boom. Western Australia had the highest income per capita, but Canberra is consistently been in that top two, and then Perth falls down when the mining boom's done, and Canberra holds that. So tight market, very good. All right, now the final one that has been...
It's Hobart.
It is Hobart.
Yeah, who would have thought, hey?
Well,
actually, it's been for the last few years that it's had a rising location score.
Yep.
What was the average for this month? Let me just look that up. 67, so that topped the nation as far as state capitals.
Yep.
It was towards the end of 2014 that started getting into that sort of exciting sort of space, but it kept going in 2015 and 2016 and still further in 2017. So there's still plenty of growth to come. How long it will last? It is a smaller market. In fact, it's something like 20 times smaller than Sydney. So you wouldn't expect the same sort of momentum.
Smaller than that. Yeah,
well, that's just based on population.
Yeah.
Sydney to Hobart's come early. It's only Boxing Day, but everyone's moving down there. Is that all the Sydney money, you reckon?
Well, who knows who's buying up there, but certainly there's demand exceeding supply, no question.
All right.
Well, thanks, mate. Thanks for that around the grounds. Any other general comments you want to make in sort of wrapping up the year? We're going to get you back on quarterly to talk about this stuff, and obviously any other initiatives that we've got that is going to add value to the LocationScore experience. So,
well, I'd just say that people who are listening to the media might think that Melbourne's run its course. I think that a year from now they'll be ruining missed opportunities if they don't jump into that market.
There we go.
Yeah, my top three would be Melbourne, Hobart and Canberra.
There it is. We've heard it here first. Heard it here from the guru.
Brilliant stuff. So, mate, we covered a fair bit today.
We did.
Movember, listeners' questions, listeners' life hacks. You outsourcing your did you know to Jeremy,
and now I've now got four weeks of every year sorted.
Exactly. Yeah, how did that work out? So, but thanks for coming on, mate. We always appreciate that.
Pleasure.
And mate, as always, thanks for coming on to the Property Couch. And
thanks for having me.
How exciting that we get to hear the Stig. Only 13 more sleeps, Ibis, before we get to hear you on the 150th episode. So you can practice your opening, you can practice your close. And of course, the life hack will be the most anticipated life hack that has ever existed on the Property Couch.
Hey, and I promise I'll remember yours.
But Ben, until next week.
Remember, knowledge is empowering, but only if you act on it.
See you guys. Have a good week.